talk about this today. We're going to talk about this today. All right. It's going to be a long, ready discussion. I'm not sure how long this will go. All right, I believe we're live. Just double check if I can see comments or not. All right. Cool. So I'm here for one thing, and that is to provide some context and information, if I can. Today, I'm going to be talking about this thing. So let's go ahead and get started. Get some music going here. Alright guys, so like I said, we're going to be talking about Bitcoin. So the first thing I wanted to talk about, I hope my microphone is coming in clearly, is the whole concept of investing as gambling. That's the first thing I'm going to tackle. Let's start there. Not even about Bitcoin itself, but just investing in general. A lot of people who I've met, college educated people, assume that investing is gambling. If investing was gambling, then the world wouldn't function. People wouldn't get scholarships, businesses wouldn't start, things wouldn't move, because pretty much everything from your parents raising you to the stock market is some kind of investment. Now you can see, you don't always see the outcome, but generally, if you do things right, things tend to work out. Now in the case of the stock market, let's look at some actual data points. That's what it's all about pounding the facts. So here we go. There we go. All right. So what we're looking at right now is a chart of the stock market for the past 100 or so years. If you look at the general trend of what the stock market does, it goes up. And there are several reasons for this. One of them is that the human population has grown, our productivity has grown, and that we do business has gotten better, more efficient, and the world as a whole is doing better than it was, say, 100 years ago. All right? And for that reason, the stock market in general has gone up. So the bottom left here was 1929, the crash of 1929. We recovered from it officially by around 1960. It took a while, but we recovered. We have a big trough leading into the early 1980s, but then we recover. And then this is 2008, and again, we recover. Another drop, this is the black swan event for the pandemic, and then we recover. The point being, the stock market always goes higher eventually. So it's not gambling, you just have to wait. There's something, I used to call it the muffin test, but really it's the marshmallow test. The marshmallow test being, I'm going to give you one marshmallow, and if you can wait 5 minutes, I'll give you another one. And the test was to see, different demographics, kids, adults, whether people could wait for a reward and that sort of thing. The CEO of Berkshire Hathaway would say that, the art of investing is the wealth going from the impatient to the patient. All right. So that said, let's move on. So currently, right now, the inflation rate, the true inflation rate, what's actually happening on the store shelves, as we all know, prices are up a lot, 10% or higher. Probably easily over. There are some things that are still below it. In fact, this actually breaks it down. You can actually look at the different charts and see where they stand, healthcare, all that kind of stuff. This is called Trueflation, by the way, this website. It's pretty cool. Food is up a lot. Utilities, 10%. Health, it's saying 3%. Alcohol, 5%. Clothing, footwear, 5%. Communications, 5%. Education, 2%. Recreation, 5%. Other, it just goes. The things that affect you and I the most are generally food and gas and property, rent, that sort of thing. All of those are over 10%. And the reason why I'm saying that is that if you didn't get a raise of at least 10% this year, you're probably underwater, meaning you're losing your purchasing power. Um, and to give you an idea, this has played out over a century for various reasons, and we'll get into some of those reasons in just a second. So, this is the dollar in 1913, and for various reasons it goes down and up. That's World War One, right around there, by the way. Um, Bretton Woods, that's a huge one. Nixon officially brought us off the gold standard, and this is where we are now. In fact, it gets lower if you go all the way to 2022. The point of this being, the dollar is losing value, and it's at the moment it's losing it very quickly. Year over year, we're losing it 10% at the moment. Again, meaning you work as hard as you can, essentially for the entire year, and a little over a month of your wage means nothing because you're losing it to inflation. This is the money supply through the pandemic. So this is the past few years, kind of wrapping up. Boom, the pandemic, and they printed a lot of our money the past couple of years. Um, yeah, so there's a lot of things going on. Yes, there's a war going on. There's a lot. The pandemic is still going on right now. We are in a recession. There's supply chain issues, but you can't discount the fact that they have printed a lot more money the last year or so. And then came along Bitcoin. So why was Bitcoin made? Well, Bitcoin was made to address some of these problems. And the reason why it was made to address some of these problems is because, specifically because of the 2008 downturn, the recession. Um, in fact, Bitcoin was made on Halloween in 2008. The white paper was released, and the first block of Bitcoin was produced in January 3rd, 2009. And in that first block, there's a quote in the Coinbase of the code, and it says, January 3rd, 2009, Chancellor on the brink of second bailout for the banks, who were the cause of the downturn as we went forward. What is the purpose of Bitcoin? So we just went through what inflation is and why a lot of things happen. Part of the reason why your house, stocks, and any solid asset that isn't like a car that devalues over time goes up, again, partially because of productivity and efficiency, but the other part is because of inflation. Um, the reason why we have so much inflation is because we have several agreements, one of which we have reneged on, and the other keeps our dollar as the reserve currency of the world. The one we have reneged on is the gold standard. And we reneged on the gold standard when Nixon was president in 1971. Let's see if I can find. I do believe. I believe one of my pages might be missing. But that's okay. Um, Essentially, the gold standard was reneged on by Nixon to allow us more monetary control, because what was happening was we were inflating our money a little bit too much, and the gold we had in reserve couldn't cover it. So countries started ordering their gold back. And in order to avoid that, we said, look, we have one of the best GDPs and one of the best economies in the world, so our money will be based on that backstop. Around 1945, we also made a deal with the Saudis that all oil would be bought and purchased through the American dollar, also cementing the dollar as the reserve currency. So these two things are the backstop for the US dollar. But again, once we went off the gold standard, the value of our dollar went down substantially. Again, this is one chart just showing it. This is after we went off the gold standard. We had already started a little bit. It's just bad monetary policy, and it went down, and we kind of flattened it out in the 80s through Reagan, all that kind of stuff. I had this amazing site, what happened in 1971. There we go. So here's some charts. So this is 1971. Here's compensation versus productivity, and the charts just keep going. So here's the overall GDP, and here's the average wage. It just starts to go flat, and in some cases goes down. Income, 20th percentile, like minimum wage, all that kind of stuff. After that, that's when we start this whole running on a treadmill sort of thing. It's funny because that's what was in his speech. Anyway, So getting back to Bitcoin. So Bitcoin was made to counter some of those forces. Digital money printing. Now a lot of our money isn't even printed through a mint anymore. It's printed electronically through loans. A lot of our money is sent to pay the national debt, IOUs to other countries, etc. And some people call that kleptocracy. So our money is devaluing while we pay other people money or other obligations, that sort of thing. Let's see, petrodollar. Other reasons is that Bitcoin banks the unbanked. All you need is like a cell phone, and you could probably have Bitcoin. The other thing is that it raises us all up together. So if I were to buy $1,000 of Bitcoin, everybody who owns Bitcoin is more solid because of it, as opposed to like a Ponzi, where you rob Paul to pay Fred, and then sue to pay Paul, and it just keeps going and going until there's a rug pull. There's a difference here. If I have 4 gold bars and someone buys 2, the price of those remaining 2 will double. If someone buys that third one, the last one will double again. That is not a Ponzi, that's just supply and demand. Alright, the truflation attributes of Bitcoin. The cool thing about Bitcoin is that it's resistant to governments. So the creator, Satoshi Nakamoto, is a pseudonym. And the pseudonym it was to guard their identity, and it was done in 2009, and that was before, while there were ways to track people's data, it was a lot harder back then because we hadn't had quite the takeover that we have now, like we do with Facebook, Google, and all that kind of stuff. It was done through online forums, secretively, and that's just kind of what happened. When he minted the first Bitcoins, there were 5 million minted. It's called the Genesis block. He also gave out some Bitcoin to some of the other people who helped him. Part of the reason why Bitcoin is resistant to government is because they cannot find the maker. There's no office. There's no way to get in to try and shut down Bitcoin. You would have to shut down every single miner and node in the system to shut down Bitcoin. So it's very difficult for anyone to really stop it at all. The other thing is, there was an argument about Bitcoin being used for criminal or money laundering. Less than 1% of all Bitcoin are used for any sort of illicit activity. It is used there, but the main culprit is the U.S. dollar still. That's why you find drugs and cocaine on the US dollar. That's what happens. So, again, the biggest culprit by far is not Bitcoin. It's just a monetary system and a little bit more. The other reason is that Bitcoin has a public ledger. So anything you do can be seen on the blockchain. If any Bitcoin that you use touches a major exchange, especially now that they have Know Your Customer and anti-money laundering policies, you'll be taken down pretty quickly, which forces the criminals to do other things and to go other places. Trying to get my bearing here. All right. So one of the features of Bitcoin is its mining. We were just talking about that right now. There are 2 types of facilitators of Bitcoin. There are nodes and there are miners. What miners and nodes both do are validate transactions. In other words, if you wanted to buy Starbucks with your Bitcoin, it has to go through a miner and it'll be verified by a node. Essentially what miners do, what they literally do, are calculate prime numbers. And those are numbers that are indivisible by other numbers. But these prime numbers are huge, like literally the size of this room. Prime numbers calculated by either CPUs or graphics cards in order to finish the prime number. Once they've finished the prime number, what happens is a batch of Bitcoin transactions are processed every 10 minutes. So one of these puzzles is solved every 10 minutes. With the chance of unlocking more Bitcoin, they also get a fee for the transaction. So they're paid either way. You can batch your transactions so that there are thousands, hundreds of thousands of transactions in one block, which is kind of cool. That's one way you can scale Bitcoin, is people batch into one of the slots of the 10-minute. The other thing is that when miners mine, depending on how many there are, they create something called hash power. And depending on the level of hash power, Bitcoin actually adjusts to the level of how many miners there are and how strong their processing power is. So no matter how many computers are mining Bitcoin, it will adjust to their difficulty and how many there are. And that makes it fair for everybody that's in the system, which is pretty neat. It's pretty cool. The other reason for mining, as opposed to other forms of generating coin, like proof of stake, for example, is it separates the power of production from the power of control. So miners and nodes can vote on these blockchains. Now, if they also, all they had to do was hold the coin to produce more, then now they have a fixed income that will be above everybody else, and they can lord over the entire population of that coin. So, and it's also less secure than other networks. There are other reasons as well, but those are some of the main ones. Essentially, there's so much hash power now, it would take billions of dollars to try and thwart the Bitcoin network. It creates a defensive network. All this hash power, you would need at least 51% of the hash power to try and thwart the Bitcoin network. And essentially, for someone to do that, it would be noticed that there would be a gathering of chips and silicons, especially now that there's a chip shortage around the world, to try and deploy such a weapon. And there's actually one of the coders of Bitcoin has something to say about that. It's kind of hilarious.
Interest in just actively destroying Bitcoin to make their own, super rigs and design chips and just throw hundreds of millions or billions of dollars to intentionally disrupt the blockchain.
Yeah, I don't worry about that at all. This cannot be done with Bitcoin anymore. This is something that can only be done with nascent altcoins. Bitcoin has achieved a level of computing that no single nation state can overthrow it through computation alone. The effort to do so would require a massive covert operation of chip fabrication, then the coordinated assault that would give them dominance over the next block for 10 minutes until we kick those bastards off the network, rework the protocol around them. They would be revealed. They would have lost $1 billion doing this, and all they got to do was one double spend. Now, here's the thing. Long before we get to that point, they figure out that if they just let this stuff run, they can actually get some Bitcoin as a reward, because the incentive structure actually works. And so I'm not worried about that. And a lot of people are watching the blockchain. And as I said before, what are they going to do? So they take over and they fork the blockchain and they go somewhere, right? They've created an alternative blockchain. Great. What are we going to do? Who's going to join the NSA blockchain? Anybody want to jump on FedCoin? So we're all going to stay on the old fork. Difficulty will go down. It will get more profitable for the miners who stayed behind, and we'll carry on with our coin, and they can go mine whatever the hell they want on their alternative blockchain. They achieve nothing. They can't make protocol changes because we, as I said, 5 constituencies in consensus, and it would take $1 billion to pull the most ridiculous Keystone Cops failure in history. Plus, this would actually require government that can do IT.
Do you have any concerns?
All right, so that's how powerful mining is. It's really hard for someone to, at this point, conquer Bitcoin. It would take a massive, massive operation at this point. It's too late. The insidious nature of the coin has worked, and it's snuck under people's noses. Now, the governments are fighting back a little bit. We'll talk about that in a second. Now, one of the drivers of Bitcoin's value is the fact that every 4 years, there's what's called a halving. The amount of supply that comes into Bitcoin is halved every 4 years. And I'm going to show a visual representation of that. Okay. So each one of these is a halving. One of these dotted lines is a halving of Bitcoin. Every time there's a halving, less is produced, meaning there is scarcity. Another way of saying that is supply shock. So what happens is the amount that is produced is cut in half. And then this, because there's less out in the system, the value has to go up. Has to go up. And again, no matter how many miners there are, the production will adjust to the mining hash rate or the power of production, right? And so it goes up. In a lot of cases, at 10x's, 20x's, 5x's, depending on where you get it. So if you time the halving and just buy before the halving, most likely you're going to do okay. That is one of my personal theses about Bitcoin. Before the halving, I work my tail off to get a little bit in, whatever. When I first invested, it was 2016, 17, and the price started to go up. Now, I had no idea the fundamentals of Bitcoin. I had no idea what was going on. I just put like 50 to 100 bucks in, and then we went through this bull market, and then it went down, and that's when I decided there's going to be another halving, so I will try to save more. And I did. And here we are now, up here, higher or equal than the past one. And all I had to do was save in Bitcoin. Someone's messaging me. All right, so essentially, once that happened, I got lucky at first, and then I found out the information later on how to keep going. So basically, Bitcoin is an asset that tends to look upward because the supply is always being cut. And there, by the way, there's only a cap of 21 million. Bitcoin always seems to look up wherever it's going. What you're looking at, again, is a chart of the entire time since it's been looked at from the beginning to end. And if you notice, it goes up. Just like the stock market goes up, right? That's why, to me, Bitcoin is not a gamble. Now, there's always the chance that somehow they can find a way to make it go to zero. But, frankly, how is that different from any risk in life? If I go to work, something could happen downtown. I could end up not so healthy or something like that. There are just many ways to put it all in perspective. It's also, out of all the cryptocurrencies that have ever been made, and now they're like tens, hundreds of thousands, if I remember correctly, it's the one with the strongest security. So that's something I'm willing to look at. And it's what's called an asymmetrical asset. That's one reason why I say it looks up. Asymmetrical being, it has a little bit of downside, but a huge upside, and all you have to do is wait, essentially. The first halving I saw was in 2013 when I was working in Toluca Lake in California. That's when Bitcoin hit $1,000. Then I went overseas to Japan, and it dipped down to about 300-400 or so. And I started watching it then. I actually bought my first Dogecoins around that time. And then when that happened, I said, you know what, if it goes up, I'll purchase a little bit. I'll see what's up, Then an acquaintance of mine, a friend of mine, said, hey, just get one and see what happens. And by that point, I was back in the States, and Bitcoin had just hit around $800 to $900. So I purchased $30 to $50 to $100 of it. And that's the history of how I got started into Bitcoin. And it's been a magical time ever since. Have I ran into a scam or two? Yes, I have. But that's not Bitcoin's fault. One of the scams I ran into was BitConnect. BitConnect was a Ponzi where they asked for so much Bitcoin and you get a guaranteed return, something like $100 would give you $1 a day. So in that, I ended up getting about $50 a day before that went under. So I pretty much broke even. It paid a lot of my bills, and I ended up okay. But I knew going into it what it was. A lot of people didn't. A lot of people gave away their life savings, their family savings, their house mortgage, whatever you want to call it, into that, and lost out. And it became a rug pull. And there are projects like that. And it's usually very easy to see if they're a scam or not. You can kind of tell. If it's too good to be true, it's too good to be true. Bitcoin itself is not a get-rich-quick scheme. It's a outlast inflation with good monetary policy scheme. And that's what it is. Um, right now, because it's a younger market, there's a lot of volatility, but that's what happens when your market cap is $1 trillion as opposed to the hundreds of trillions that the world market is. All right. So how to use Bitcoin? Let's say I wanted to send someone some Bitcoin. There's something called a public key and a private key. This is a public key. This is one of my real addresses. You can actually send me Bitcoin here if you have the ability to. You can have it in several forms. You can have it in a QR code. You can have an alphanumeric string like that. In some cases, you can have like a nickname or an email depending on the service. I think Cash App does that. And then there's your private key. The private key can also look a lot like a public key. But here's another version of a private key. So imagine this. So if someone were to, if you lived in a really crappy country with a despotic dictator, a secret police, and all this crazy stuff, and they constantly were robbing you of money or something like that, and you need to get out. Well, here's one of the interesting fringe cases for Bitcoin that we don't necessarily need here in the States, but you could use it for other things. So let's say you didn't want to pay the government, you wanted to hide your money. Well, a lot of private keys now come in keywords like this, about 16 words or so. This is just an example, just random library words, right? Dictionary words, right? So what you could do is you could memorize, let's say 16 words, whistle, stage, certain, supreme, cautious, current, wasteful, impulse, perpetual, whatever. Memorize them. And then what you do is you destroy whatever medium that Bitcoin wallet is on. Just destroy it, get rid of it, don't need it anymore. And when you get somewhere safe, you download a wallet on another device, input these words, and your money will appear right in front of you. Because Bitcoin is the private key. That's where it is stored. That's where it exists. Your public key is where it is sent. The private key is where it is realized. The private key is a lot like your social security number. Never give anyone your private key should you ever get into the cryptocurrency space. Ever. Some people go as far as to hide their private keys around their house. They'll have it laser printed onto metal and split into 3 pieces and hide it in different spots. They'll put it in safes. They'll do everything. There are different types of Bitcoin wallets with private keys. I have several wallets, including a hardware wallet. Again, if someone came in here and tried to take, this means absolutely nothing without the private key. I could destroy it, they could break it, it doesn't matter. As long as I know the private key. That's how that works. This is more of an interface that makes it easier to store things so that as you're transferring it, no one can hack your computer and get it from you and things like that. And believe you me, people are trying to hack Bitcoin and manipulate it and all that kind of stuff. Let's see, am I missing anything? Some of the ways that you can actually try to attack Bitcoin, we talked about them, the 51% attack. So if you have enough hash power, you can attack. One thing of note is that when Bitcoin has been attacked, it has been forked twice. There have been some charlatans that tried to take over the network and fork it, and it caused a big stir and a lot of debate and a lot of arguments 4 or 5 years ago. But one of them was Craig Wright and Roger Ver. And Craig Wright split from Roger Ver's split and created another chain of Bitcoin called Satoshi's Vision. Don't buy that ever. If you see that, it's worth dust in the ocean. It's not worth your time. But someone did do a 51% attack on that, among other chains. And guess what? Even under full attack, it did not completely crash or die out, which speaks to the resiliency of the blockchain technology. Even though a successful attack happened, it still kept chugging along after the fact. We've been in a downtrend for a little bit. I'm going to explain why that's been the case. First of all, it's been proven in 2008 that the government tried to pop Bitcoin. They thought the market was too optimistic, and so they crashed it by introducing futures. Futures were invented for commodities like wheat, grains, and farms that have a chance of doing well one year and not so well another year. So the futures kind of average it out, and you place orders above and below where you think the price will be, and you get paid based on where it lands that year, according to your assessment and things like that. It's not really made for something like Bitcoin, which is generated every 10 minutes. But that was the first product that they gave to Bitcoin. They did that in early 2018, and that crashed the price. And here's why it crashed the price. Because when you place, cause at this point, that is betting. When you are in futures, that is betting. The only way it would not be is if you have people that are awake 9 a.m. to 5 a.m. to research the entire market and put all that information together and somehow make a cohesive plan that works with billions of dollars. What happened is that you can place a bet, call or a put, whatever you want to call it, above or below the price. If you lean into that with billions, millions, and billions of dollars, then what happens is normal people like you and me who may watch the futures market can get scared. We also have automatic trading machines that react to news of any type. So by doing that, they can force the price down. Now, mind you, it's harder for them to do that now because the market cap, in other words, the total value of the entire network of Bitcoin is so large that technically doesn't work quite the same way anymore. They can't funnel enough cash to really dip it down like they could a few years ago. But that's what crashed the market in 2018. Blatant manipulation by malicious actors. But it kept on chugging. So Bitcoin kept going. And then we had another halving, right? So now, with this new halving, institutions are part of the game. So they're doing all sorts of fun things like taking profits and testing different moves here and there, spoofing the market. Spoofing is when you put a sell or a buy down and then withdraw it. So like something that the market can't handle. So let's say an exchange can only handle, let's say, $100,000, and someone puts $1 billion worth of Bitcoin sale on that site, and then everybody starts reacting, oh my gosh, and then they take it off. They affect the price and then buy at a lower price. These are little ways they can game it. Another way that they can game is called over-the-counter trading. So over-the-counter trading is essentially like a physical trading desk. Let's say I had, for example, this hardware wallet with instructions on how to realize the Bitcoin. This is one way of doing it. There's several ways to do it. And I say, there are 1,000 Bitcoin on this wallet, and you can sell it to me for such and such a price, but it won't affect the spot market because we rounded up Bitcoin early on and put it in here. So you can buy it without disrupting that market or letting people know that you're buying up front. In other words, they get to buy a bunch of Bitcoin without affecting the price of Bitcoin. So that's one form of market manipulation. And then there are the classic ways to do it. Like instead of buying all at once, you buy, pennies here, 5 cents there, $5 there, $20 there. That's what Michael Saylor did with MicroStrategy. A brilliant move on his part without being totally underhanded, in my view. So unfortunately, and if you see my Facebook posts about how I think Gary Gensler and the SEC is corrupt, well, the SEC has turned down over like 20 ETFs over the years. These are spot traded. In other words, you would actually use actual Bitcoin. Our current futures are not traded in Bitcoin. They will buy Bitcoin for the trade and then sell it on completion of the contract, making the price kind of go like, boom, boom, like a heartbeat, like this, right? So what happens if you were to actually trade in Bitcoin and be delivered in Bitcoin is that the price would just continue to go up because people would be trading in Bitcoin with a couple people selling if they make profit, whatever, right? And unfortunately, the SEC keeps approving more of these futures. Not the spot traded, which is the good one. They keep approving the the other futures, which are dollar traded, and really have not too much to do with Bitcoin, unfortunately. And recently, they approved what's called a short Bitcoin futures, which literally they are betting that Bitcoin will fail, or I should say go down, I should say. And so they've approved all of these other products, but they haven't approved a spot ETF. I approve of regulation, I just don't approve of slamming the door shut. Because if it doesn't go here, it's going to go somewhere else. It's going to go to Switzerland. It's going to go to Canada. It's going to go to Brazil. It's going to go to Germany. It's going to go to France. It's going to go to Australia. These are countries that have Bitcoin spot ETFs already. And we're behind. It's funny because Gary Gensler, the leader of the SEC, actually taught at MIT. You can actually find his courses on YouTube today. He talks all about Bitcoin for like an hour or more. Right now, they have almost no clarity. The only thing they've said to provide any kind of clarity to Bitcoin is that Bitcoin is a commodity versus a security. Now, what is a commodity? What is a security? This should make it easier. This is the literal definition from the SEC. A security. The term security means any note, stock, treasury stock, security future, security-based swap, bond, debenture, evidence of indebtedness, certificate of interest, and or participate in any profit-sharing agreement, collateral trust certificate, pre-organization certificate of or subscription, transferable share, or investment. If that sounds like a stock, you're right on the money. Another way to say it is that anything that goes towards a centralized company and raising revenue for that company is essentially a security, right? Bitcoin has no CEO, it has no foundation. It has developers, and that's it. Pretty much every other coin that exists is a security by that definition, including Ethereum. But Ethereum is playing ball, and they might get a pass, which the SEC does as well. Sometimes you pay a fee, you kiss the ring, and you get to do business in the United States. With no clarity, people are afraid to jump in. There was an article the other day, $160 billion is sitting on the sidelines waiting for clarity from Congress or the SEC or the CFTC, which governs commodities. And as we sit up in the air, this sucks. There's been a lot of corruption over the years when it comes to Bitcoin. New York has something called the Bit License. What is the Bit License? Years ago, you have the first stock exchanges dedicated to Bitcoin propping up in Manhattan. One such exchange had its machines ready to go. It had all the TV screens, it had all the chairs, it had everything ready to go. And a member of the Bitcoin community got crucified for their Bitcoins ending up in the hands of a nefarious actor, unfortunately. And they created the Bit License. The only way you can do business in New York with Bitcoin is to have a Bit License. Now, the person who led the hearing of the Bit License has become a consultant to large companies who want the Bit License. He's cashing out on his knowledge of how to get the paper through, while everybody else strangles. That exchange had to close down, and they never set up shop. And I'm pretty sure, and this is my opinion, that they did that so they would never be seen in the financial center of New York. Just recently, they passed a law that I believe you have to be part of kind of the in crowd to do mining in New York. And a lot of these just cause bad press. They try, it just really sucks. They try to associate this marvel of technology with bad things. It happens all the time. Anyway. One of the funniest things about Bitcoin is that there's an actual obituary site that shows that Bitcoin has died 461 times in the past like 10 years, 10, 12 years or so. It's kind of hilarious, and we laugh every time it happens. You have to understand that Bitcoiners are a smug group. Bitcoiners laugh in the face of a lot of these people saying that it can't be done, because it is being done, and all we have to do is buy some. For example, to make the price go up in Bitcoin, there's only about 2.5 or so million Bitcoin out on the market left to be bought. Let's look up the population of LA County. So 10 million people, right? Let's say it was 2.4 million, right? If 2.4 million people bought $1 Bitcoin every day for the next year, the price would rocket up. A lot of these mechanisms that I'm talking about, futures, the short futures, they would crumble in the face of people just buying Bitcoin. And it raises everybody up at the same time. Let's get into some of the negatives. So, where are you at? So Bitcoin, one of the big criticisms of Bitcoin is that it uses lots of power. Um, and the thing about that is, so there are several metrics that show that Bitcoin uses far less power than the traditional banking system. Remember, the banking system also transports gold and other assets through its vaults. So a lot of people, so these is actual research that was actually done recently because people kept trying to put the energy uses of Bitcoin down. It uses 56 times more energy than Bitcoin, the banking system does. The Bitcoin system uses the same amount of power as all the video game users around the world. It uses the same amount of power as the Christmas lights industry does in about a couple months of the year, except that it actually helps people and lifts them up, other than just their mood. I think that's worth it. And the other thing is that power production is really the issue here. We need to find better sources of power. And frankly, that is a task we could have been doing for decades, but instead we're resting on our laurels. So when it comes to power, I'm not worried about Bitcoin and the way it affects the environment because it's a small part of that. In fact, if you are a lousy, disruptive, messy miner to the environment, you're probably not making as much money as you could make through Bitcoin because most of the profitable miners use geothermal, wind, hydroelectric, literally a volcano, which is still geothermal, and any other method they can, solar, to obtain their power for their Bitcoin miners. And that's what they do. That's what they do. In other places where they don't have all of that advantage, what they do is they use the extra energy that would have gone to waste anyway. So that is the state of this industry. That's what happens. And there are a lot of people I see coming out of the woodwork trying to talk about it who don't know that much about it. And it's like, okay, well, I literally wake up to reports about what's going on in the sector. It's my secondary income. Like, I have to, you know. By the way, on the other front of Bitcoin being a Ponzi, most Ponzi's don't give away their stuff for free. Bitcoin does. This is the one shill you'll see in this entire video. Free Bitcoin is a faucet that's been around. There we go. Free Bitcoin is a faucet that's been around for 13 years. They are, in fact, a mining faction. They are also the third largest casino on the internet. That's how they make their income. And they give away Bitcoin for free. You can register today. And this is what their faucet looks like. Most likely you're going to get 2 cents worth of Bitcoin all the way up to about $200 worth. If you actually get the bottom two and find their support site, they will give you an extra $20 should you make it. They also have a premium rewards program that you can join. And here's one way to sign up for it. Here's the QR code. You can use your phone to sign up for it. It's really good. Again, I've been with them for over 5 years, and they've been around since 2013. I swear by them. They're pretty good. So we were talking about why Bitcoin went down a few years ago. Let's talk about why it went down now. So Bitcoin went down partially because the Fed raised their interest rates, and they rose their interest rates to fight inflation, which is good. We should have been doing that for a while. We went through a pandemic, and there's a war going on. It's insane. There's a lot of crazy stuff going on, right? Well, we hit a relatively stable price of around 30 to 40K not too long ago, and we were just kind of hovering around there. And what happened is, mysteriously, stablecoins are equal to the dollar or some national currency. So in this case, the stablecoin US Terra was targeted. US Terra is called an algorithmic stablecoin. An algorithmic stablecoin, instead of being backed by assets like actual dollars or bonds or something like that, uses another asset to cover for itself. So in this case, what US Terra did was they went, okay, we're a little bit under the dollar, so we'll sell some of our other coin called Luna. So they started selling their Luna, but unfortunately Luna started going down. Okay, so they had 100,000 Bitcoin in reserve, and when Luna and US Terra went down, they started selling their Bitcoin, and about 100,000 Bitcoin dumped on the market. $100,000 Bitcoin is equal to, let's see, what is this? That is 10,000 million. That's almost $2 billion currently. It was about $4 billion before. All right. So they went down, and let's get rid of that. There we go. So it went down, and went down to about 30, and we started breaking below $30,000. Then what happened is, it was apparent that a specific firm called Three Arrows Capital was off guard. Three Arrows Capital is the poster child of what not to do in the Bitcoin space. Three Arrows Capital essentially borrowed from several exchanges and several lending companies, and then when they were caught out by the price going down, became insolvent and stopped paying back their loans. Now that wouldn't matter too much, except that some of these more legitimate companies didn't take any collateral from them, meaning when Three Arrows Capital started defaulting, very few of them had anything to liquidate, and so they started closing down withdrawals. Now this leads to a main point that I want to talk about, which is why I introduced the public and private keys. Okay, if your Bitcoin is on an exchange, this is all about personal responsibility. It's technically not yours because they have your private key. It's in their wallet. So, unfortunately, in order to generate real yield with Bitcoin, you have to put some risk on the table. But unfortunately, these services did not do that. We're talking Voyager, BlockFi almost went down. There are several others. Celsius Network went down, and they're currently making recovery plans to try and give their customers some value back at some level. And that's why we are now at 20K. And people are currently watching to see if there's more fallout from these drops in Bitcoin. People who went way too far out on the risk curve. What is the risk curve? Well, essentially, holding a stock, holding Bitcoin, holding anything isn't that much of a risk. Remember, stocks go up, right? Even if they go down, they'll eventually most likely go up again. It's not a big deal. It takes time. Cryptocurrency is a little bit faster than that. Where's my stupid chart? There we go. What some people do though, they go out and they do what's called leveraging. Leverage is when you borrow money from an exchange and place a bet on top of your position being the money that you have in the market at the time. So if I own, let's say, $10 and it's in the market and I want to leverage that, okay, I want to borrow another $5, so that's 50x. So every time it goes up, I make more. If it goes down too far, it gets zeroed out and it's gone forever. The chart I'm showing you right now is a liquidations chart. Liquidating means they were zeroed out. They lost. They went to zero. Everything they had went to zero. Let's look at one of these big ones here. This is 135 million in longs that were lost because the price went down that day. At the same time, you had about 74 million in shorts. In other words, people who bet that it would go lower, but at the wrong time, so they lost as well. A lot of people think that they're super duper slick and that they know more and they have the information to make these calls, but the truth is that now that Wall Street is in the game, it is true gambling because they have a will of their own. And this is my opinion at this point. It's cheaper to get your Bitcoin than it is to buy more at a higher price. They want your Bitcoin, they want my Bitcoin, they want other people's Bitcoin. That's what they want. And the best way to do it is to poke and prod and shake the tree and scare people out of their Bitcoin, because this is a land grab. There's only 25 million. So, let's talk about that, by the way. So we talked about the risk curve. Never use leverage. It's that simple. It's irresponsible. It's how you actually lose money. It's one of the few ways. All you have to do is hold. It's very simple. But when it comes to the larger players, there are, again, 21 million Bitcoin. About 19 million have been mined. 5 million are in the Genesis wallet. Another 5 million or so are lost forever. So there aren't that many Bitcoin left. In fact, there aren't enough Bitcoin for the amount of millionaires in the world. So again, there's only 2.5 left on the essentially liquid on the market. If we just were to all just buy $1 a day, it would stop all of this gerrymandering and silliness, and it would just go up. So Bitcoin was made for you and me. It wasn't made for the banks. It wasn't made for the politicians. It was made for you and me because it lifts everybody up at the same time. I think I've pretty much said everything I want to say. I'm going to go ahead and start closing some of this stuff down. It's just a lot of information. 10% inflation. 10% of your hard work is gone every single year. I want to leave off on a couple notes. This is the Lindy effect. Lindy effect is the process of Bitcoin becoming an actual global currency and possibly a reserve status. You can find this, just look up Bitcoin Lindy effect, and in the process we are about here. We did that. Again, stock to flow is based on the fact that according to supply and scarcity, it should hit about this certain price. Again, this model was made by a person called Plan B, and Plan B pretty much called it for the first couple halvings, and he just can't account for, again, war in Russia, can't account for the pandemic, can't account for this massive recession. It's all happening all at the same time. It's an interesting storm. So it's kind of, you've seen subdued price action, and that's what's happened. That's why it's a little bit off from where it was before. A lot of people use that as one of their main metrics. Yeah. Let's see, exchange reserves. Let's see if we can find that. Okay, so the last chart I want to show is called the Bitcoin reserve exchange on reserves. Excuse me, reserves on exchange, or exchange reserve. So we were talking about how many Bitcoin are left in the reserves. Well, here we go. This one says 2.3 on this chart and lowering. Now, what tends to happen is this causes supply shock, like I mentioned before. When the amount of Bitcoin on the exchanges gets lower, that's usually a sign that the price is going to go up. Usually. Not instantly, not overnight, maybe not even the next week or 2 weeks, but generally it'll eventually go up because supply and demand. There are different ways, again, that they can spoof the price lower temporarily, but it's only temporary. They can't fight the entire market as it pushes up. So when I say that now is the time that I'm going to buy as much Bitcoin as I can with what limited resources I may or may not have, I'm going to do that for the next half year or more. And guess when the next halving is? The 21st of May, 2024, less than 2 years. If we have the same amount of demand for the current supply, then the price has to go up. It's just math. It's not some crazy game. It's not a Ponzi. That's what's happening. So again, this is going down. It's been going down. The price will eventually rebound at some point. It may even defy the stock market, which has been correlated to or similar to for the past few months. Let's look at some videos real quick before we leave. This is a member of the Space Force, and he has some very interesting things to say about Bitcoin.
Explain a little bit about, without getting into any one of the current situations, explain a little bit as to how you think about the national strategic defense implications of Bitcoin itself from like a U.S. perspective.
Well, this is where it comes down to this conversation that we talked about earlier. The software is tricky. Everything about software is hard. It's
Correct.
invisible. It's inherently unintuitive. It's complex and confusing. The size and complexity of software scales to the point where it can have infinite states. It's like Proteus. It can take any shape, and it can run through, like every time a software runs a new subroutine, it's technically a wholly different thing. And you can have thousands of subroutines in a single piece of software. Two people can have two different abstractions and both be correct when they describe the form and function of software. Remember, because these are just abstractions. Like software is only a set of instructions that tells a discrete state machine what to do. So if you call it gold, but I call it a gun, neither of us are technically incorrect. More importantly, software can perform two functions at once. Okay, so I get accused all the time of being a hammer that looks at Bitcoin like it's a nail.
Mm-hmm.
And but the implication being, well, obviously it's a monetary system. So the screwdrivers are calling it a screw, the hammer's calling it a nail, and people don't understand that it can be both things at once at the same time. It's software. That's just how
it is both things at once.
Well, you remember your question was about explaining the national strategic implications of Bitcoin. If you want to understand it, don't look at the software. Look at the hardware piece. Look at the thing that everyone can see. Okay, this is how you describe the national strategic implications of Bitcoin. This is how you explain why there is no replacement for Bitcoin. Both animals and people have been trying to search for a substitute for this. Humans have been doing it for 200,000 years. Mm-hmm. Okay, a way to defend their property more effectively. And by the way, the more energy you use, the better your defense is. That's why you don't want to take a knife to a gunfight. Energy is good. The power that you project, the more powerful a hunk of metal is that defends your property, that protects it against denial of service attacks, is good. And by the way, this allows you to actually physically stop an attacker, a denial of service attacker. It's not just a deterrence like proof of stake. This is ability to physically stop.
That's a mining machine.
So when you think of that, or go ahead, continue.
So my goal from the very beginning when talking to policymakers, this is what's super frustrating. Like I said, I'm an astronautical engineer in the Space Force and a U.S. National Defense Fellow at MIT. My job, what you pay me for, is to understand what this form will be in the future and to posture this country to make sure that we have the most powerful thing, that we're not taking a knife to a gunfight in the future. And so it's super frustrating when people are talking to me about Bitcoin as if it's strictly a financial system or strictly a monetary network, and acting like me, that I'm not qualified to be talking about this kind of stuff. And it's also super frustrating to watch a bunch of bankers, a bunch of business people, a bunch of finance people try to explain it, because then they get confused and then they say, oh, it's the digital version of this. And it's like, you could have a PhD in economics and not understand the socio-technical implications of this. In fact, most of them don't, right? And then, or they'll go, well, okay, it's digital energy. You see, we take a state machine and we digitally partition it across a distributed ledger. And the people who are allowed to write on it are the ones that find the knots. And it's like miners searching for gold. And then we act surprised when a bunch of people get freaking confused about what you're doing. Or if you treat it strictly as a property, they're going to say, what makes Bitcoin different? What makes Bitcoin different than any other type of digital property or digital asset out there? So my goal is to just take this complex technology and boil it down to something that anyone with no background can understand, and then make informed policy decisions on it. Because if you treat it like a digital version of this, your policy is going to look very different than the digital version of this. Because if you think it's just digital property, then you might say, okay, well, maybe it's a threat to USD hegemony or this or that. But if you realize that this is the future of warfare, what happens when we scale this up? And it's not just me, but now it's an entire army of people. What do we call that?
War.
It's called war, okay? Nations live and die and are created and are uncreated by their ability to understand what form this will take and to be good at that game in the future. This is how we defend everything that we value. people forget this. And if a new technology emerges, if a new one of these emerges, banning it is not an option. You can't ban your adversary from using this, right? So when Orban the engineer creates cannons, he was the guy that invented this. He figured out how to iron cast cylinder, fill one end with gunpowder, fill another end with a bullet. He takes that technology to Constantinople and he offers to build it to Constantine. Constantine turns him down, says he can't afford it. You see the logical flaw there?
Correct.
Because Orban goes to a 19-year-old kid, the Sultan Mahmed, and within a year, they're shooting down the walls of Constantinople. You don't get the option, right? You have to buy it. If you can't afford the cannon, you buy Orban. You buy von Braun. Okay, so this technology has multiple shelling points in history. We use it for warfare. We devise mechanisms so that people pay fees to other people to wield this technology on their behalf.
Correct.
And that's precisely what we're doing with this technology. People who buy Bitcoin are subsidizing the development of a new weapon system, a new defense industrial complex. And which one do you think is more ethical?
Well, definitely the Bitcoin mining. The digital protection of property rights is not only more ethical, but it's also, I would argue, much more effective in achieving world peace. Because at the end of the day, you end up actually knowing with almost a high degree of certainty, or actually with a high degree of certainty, it is impossible to penetrate versus as we are watching right now in certain areas of the world, some people are confused as to you can use the gun and those types of weapons. And there's a question. Can we actually overpower another region, another army, another kind of citizenry? And when you get into the digital world, you know that it can't be penetrated.
In every way that you look at this technology, what is the current conversation doesn't make sense. What is being discussed at the national strategic level is incongruent to what this technology is and what it represents. Obviously, the thing that projects more power, the defense technology that uses more energy, is a better defense system. Obviously, the technology that can preserve citizens' private property rights without spilling blood, without the unfortunate side effects of this, is more ethical. And obviously, trying to ban this from your country is only going to give your adversary an advantage over you. Read history. Read what happened when Whitehead invented the torpedo, and the Royal Navy, the powerful Navy, turned him down and said, I'm not going to invest in this technology because it represents a threat to my naval hegemony. You don't get the option not to turn where this technology takes you.
Hey, you, did you like this video? Great.
And that kind of gets to the point of why a lot of people believe in Bitcoin. It's not so much the monetary gain, and that's nice. It's that some people believe that it has the chance to simmer down, or even in some cases end war. Why is that? Well, our dollar is backed by oil and our debt and our GDP, right? What if we just used a little bit of Bitcoin to back it? That's what some people would like. That's an interesting thought experiment. I am not a Bitcoin maximalist, but I think Bitcoin's an amazing invention, an amazing wonder, and it's changed my life. So that's one reason why I back it. It could go down another 10 grand or more. I don't care. It's not really about the price necessarily. If something happens to usurp it, then I'll consider that when we get to it. Yeah, that's kind of what it is. Again, if you want free Bitcoin, this is my favorite faucet. I use it every single day, guaranteed. Here's a QR code to go visit it. I hope this cleared up anything, that I wasn't too nebulous about everything I talked about. There's even more to explain. This is just 1 hour of a conversation or more talking about it. Yeah. Anyway, y'all, you have a wonderful night. Be safe, and we'll catch you on the flip side.